afternoon this Tuesday, August 15th. Selling prevails, corn breaking to the lowest prices since the harvest of 2021. Yesterday's crop ratings surprising everybody on the soybeans, jumping 5% from 54 to 59% good to excellent. Corn matching that as well, 59% good to excellent. So the trade today just taking that, in spite of the heat and dryness that's coming, they're just running with adding bushels to what was released last Friday from the WASDE crop report. Everybody's getting optimistic that maybe the corn yield's heading back to 177. They think the bean yield might even head back up to 52 bushels an acre. But I wouldn't be too quick about this. Call me old, but I vividly remember 2003, how we came out of a little tit-for-tat in July window period, but we were trending lower since May. We bottomed right at the middle of August ahead of a heat wave that was getting underway. And then an explosive rally. It took off after we got into that heat to the end of the month, and we didn't look back. So let's remind you what's coming up. And let me show you a little bit of history. This is what's in front of us heading into the weekend. This is for Saturday, August 19th. I'm showing the GFS as they seem to be similar with the Euro as well. But look at the heat now starting to roll into Iowa, Nebraska, even southeast South Dakota is going to get hit with it. It starts there, and southern Minnesota. And here's your temps that are coming in. Look at this, all the way into Iowa, 105, 109. Southern Minnesota, they're already not looking that good. That's not going to help their matters. Eastern Nebraska, South Dakota, look at it cook up. Now, of course, Iowa, as you head through Iowa into Illinois, well, Illinois, okay, you're in the 90s, 83 in Indiana. That's not so bad, right? Well, look, we get into Sunday the 20th. That heat spreads east into Illinois and Indiana. The temperatures continue to magnify Wednesday the 23rd. Let's take a spot check. What is Wednesday the 23rd going to happen? Look at here, 105, 102 throughout Illinois. Look at Missouri, 113, 114, 116. That's not going to help their beans. And look at all of Iowa. Again, multiple days of 100 with no temps. Now, one thing they're noting as the Ag Resource Tour is underway this week is they're noting in Illinois, the beans might look good on the road, but once you get inside, they're not that great. Corn, as they got into Iowa here, they're saying the kernel depth, they're surprised how shallow it is. They're not deep kernels. Well, this isn't going to help the fill. Let's just keep going. This continues. Here's Friday, August 25th. It abates a little bit here in Minnesota and northwest Iowa, but Illinois, Missouri stays hunkered into it. Let's go to Wednesday, August 30th. Iowa, still cooking again, brings the heat back. Eastern South Dakota, Sioux Falls through southern Minnesota. And la-di-da-da, last day of the month, still heat in the area. This might take the edge off of these beans for the yields and put us below 50 bushels to acre. And the USDA has already affirmed we're probably going to be 83.5 million acres. Well, guess what happened? This is in 2003. This is the weekly chart. Here we were in 2003. Let's go down here. We were breaking lower into the summer. There's July and August. We got into the second week of August. Market was still getting beat down. They wanted to sell. The next week it came back, turned up. The following week, this would be the last week of August, gapping up. And this thing never stopped until we got into March and were assured a South American crop. And this was all about yields just tumbling on the beans the last half of August. Could that occur when today everybody's running around thinking, oh, we can go to 52 bushels based off yesterday's crop ratings? Well, we know next week's crop ratings will probably be okay yet, holding 58, 59%, maybe even top 60%. But they could go to pieces real fast with the heat I just showed you. So take a look at the bean chart. This was my expectations, and we gave up on this X wave, making it to $15. And I've been suggesting, well, this run to the 100-day moving average is wave one. We've got a little two coming here, then a final three. I am adjusting things here. I still think we're still climbing in an A, B, with a potential C length that matches the A. If this thing comes to fruition, we've got support down in here that can probably hold either the 100-day or maybe they want to slip it down into Monday and challenge the trend line here a little deeper and run the 100-day moving average. But I think we got a B wave that's actually going to support. This heat is something else. Maybe that sets up this run to $15, and that occurs then right after Labor Day into early October even yet. So we'll see. This heat is interesting. Intraday charts, we closed right down on support here. If we were eminently bullish, we would hold and take off. And this, of course, is my old expectations of a wave two and then a final drop. We'll see how this heat plays out. I think this is playing out differently, and I'm more attuned to this chart here setting up, and we're dropping into some support that literally creates an explosive rally. We'll see how this plays out. Corn, still in our wave 3 decline, which obviously when we broke through 481, targets the 460 range for our wave 3. Breaking it down, we have a quick wave 1 in here below possible before another little 2 bounce, and then another 3 down to 460. But we'll see how this plays out with wheat, especially the Pro Farmer Tour gets to work in this next week in these 100-degree temperatures. Wonder what the tweets are going to look like next week. Maybe something disparatively comes out and they maybe create this spike back to moving average resistance we were kind of looking for, back to 523. Wheat breaking lower again today. Obviously in a Y formation, we have a W, X. We threw this out initially on this explosive rally, but we got a little more friendly on the Ukrainian talk, but not so much. This still was an X with an A, B, C. Now we get a final Y break. Our 60-day cycle turn does not occur yet till September 1st, so unless something miraculously occurs early next week and we set up an early low. But from there, we do anticipate a final leg higher into the fall. Chicago wheat doing what we suggested. B wave decline here yet. Likely to hold the wave W low. We'll see here, like Kansas City could get into trouble, but still we're working out an a B, and Bs can make a new low by a day or two and then do off a final C into the fall. Quick look at crude oil, stalling out. Was thinking we could get up into the $86.5, $87 range in our change in trend date, but not occurring with outside influences dragging us lower. Appears we're breaking down, and maybe it's down into our turn date. What you note is if this break were to continue, big support at the $76.5 range for the moving average. Even our intraday 6-hour chart, we had said in the newsletter yesterday, watch out. If we take out 81.90, we got trouble. Well, okay, maybe a mild bounce into tomorrow's API numbers is possible, but continue to work lower. Just know that $76.5, $77 range, massive support from what was a summer low, and we are likely working higher. And guess what? Hurricane season into September is around the corner. What next happens there, where we have to shut off some wells and draw from the strategic reserve? Cattle, on support today, I use the 31-day exponential moving average, and you can kind of see, it kind of finds that market. Parking right on top of it today. I think this is a wave 5 top. We've got box beef moving higher the last 2 days like it seasonally should, stocking up for the upcoming Labor Day weekends. But when that stops, we usually stumble into the month of September, and we're probably just pre-starting this thing and heading lower. Closing lower again today, not good. Heads up a wave C that could head down and test possibly here this 71.5 to 72 range on a break into a wave C. Feeder cattle obviously can't run with the cheap corn, as the deferred live cattle contracts also slipping lower. So we get this big congestion going on. Obviously trendline support coming up to the rescue here too as well, but it doesn't mean we can't break back to the 240, 240.5 range on feeder cattle. Same thing with Jan feeder cattle. Just consolidation, failure to break out and run away. Again, too, congestion can fall back and match up in that mid 240 range for the January feeders. Hogs did summer top over a week ago. We suggest that would occur. We have been recommending livestock risk protection insurance contracts in here. It is now breaking lower. You got a 1, 2, likely 3 leg that would probably want to push a little below this. Probably get some 3-wave support in this just sub 77 range, 76. Get another mild 4th wave bounce. Probably something to here. Then we get a final 5th wave break again lower into the fall months. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.